My name is Jeff Roth. I'm with Commercial Finance Advisors, and we do small business financing as well as commercial mortgages throughout the nation. And in this video, I'm going to be talking about the problems associated with high levels of personal expenses, also referred to as personal needs. Note that this is just one section of our total report, which can be found on our website. And throughout the report, we discuss the most common causes of loan decline and solutions to each individual problem. So as far as personal expenses, first of all, a lot of small business owners are surprised to learn that this is, one of the major reasons for bank decline. A lot of people have sort of the mentality that, what do my personal expenses have to do with my business? And the primary challenge here is how underwriters calculate personal needs. And basically what they do is they take whatever personal expenses that show up on your credit report and they double that amount. And then they take that amount and they subtract that out of your business cash flow. So if your business is is tight in terms of its cash flow, the additional expenses, in terms of the way that that's calculated, can have a negative impact on your cash flow and therefore result in a decline. So as far as the way that the underwriters calculate personal needs, I'll give you an example here. Say you have a house payment of $2,000 and two car payments of $500 each, and various other expenses that show up on your credit report at $1,000. So in that example, we're talking about $4,000 a month that shows up on your personal credit report. Bank would simply take that $4,000 and double it to $8,000 per month. They would take that $8,000 and they would subtract that number out of your business's cash flow. You may not, in fact, need that much extra money to live personally. So it's just an underwriting quirk. It's just how it's done. And it negatively impacts a lot of small business loans. Again, a lot of small business loans that their primary problem is low cash flow. Another challenge here for a lot of small business owners is blended expenses. A lot of people over the years have mixed business expenses on personal items. For a very common example of this is using a home equity loan to for your business, or using personal credit cards for business expenses. And one of the challenges here is a use of proceeds challenge. And basically, what underwriters do is they're pretty strict about this. They will just take whatever debt that's in your personal name, even if you can prove that the money was used for business expenses. Most banks will simply take that amount and double it. And it's a real problem. We see it across the board. We see it all the time. Small business owners are struggling to get started. They're struggling to secure financing. And over the last 10 years here, one of the easiest loans to get would be an equity loan on your house, or obviously personal credit cards. As far as solutions to having high personal debt, there's a couple of general suggestions here we have. Also, note that actually of all the various challenges that small business owners facing, that this issue is one of the easier ones to resolve. You have more control over this a lot of times. So, first of all, pull your credit report, study it, and figure out what debts are having the biggest impact on your cash flow and on your personal expenses. You really want to focus first on debts that have the lowest balance as well as the highest monthly payments. If you can either pay those off or refinance those, you're going to have a really big impact on your cash flow. A couple of ways that you could refinance, you may consider using a home residential loan. These loans are difficult at this point to get done. However, they're not as hard and complex to get a commercial loan done. So you may want to take a look at that. It is common that you could roll various personal debt into a residential loan, such as car payments, personal credit card debts, etc. So you're going to avoid a lot of the quote use of proceeds issues that we face on the commercial side of the business, and hopefully the transaction would only take you 30 to 60 days to get done. Another solution here would be to go the private money route. It's a difficult solution, it's an expensive solution, and you really realistically need to be at or below 50% loan to value for this to be really a viable option. And most private money lenders, what they consider 50% loan to value, or what they consider value, most people don't. So they typically would use a shortened time frame to dispose of properties, which reduces properties values. So it is an option. However, you really have to have a lot of equity in your property. And with hard money loans, they have no use of proceeds issues. They're really looking primarily at the asset itself, your exit strategy, and the cash flow that your business has. So they are easier to get if you have that low loan to value. You may also just consider looking for and finding more aggressive banks. One of the the rule for doubling personal expenses, I would say that probably 90% of the banks out there use that rule of thumb for calculating personal needs. However, some banks don't. Some banks will actually take a set amount, such as $20,000 or $30,000, to add on top of whatever personal expenses you show on your credit report. So if you have a high level of expenses that show up on your credit report, and you find a bank that's only going to throw an additional $20,000 on top of that to reflect your annual personal expenses, then that might be the solution to get over your problem there, and so that your business does have the cash flow that you have to qualify for the loan. Another solution here would be to make sure that the loan officers at the bank are calculating your personal expenses correctly. This is a very, very common area for loan officers to make mistakes on. For example, business credit card debt, as well as other business expenses that are personally guaranteed, will commonly show up on your credit report. And as a banker or a loan officer at a bank rushes through transactions, a lot of times they won't take the time to go through line item by line item on your credit report to determine which are business expenses and which are not business expenses. Again, business expenses are calculated on a much more lenient ratio. So the more debt that you can show up on your on your business side, the better for you from a cash flow perspective. So, if you suspect that there might be an issue there might be a mistake there, you need to sit down with the loan officer at the bank and discuss and point out that a lot of the expenses that show up on your personal credit report are in fact business expenses. So we thank you for listening to this segment. Again, this is one section of our total report regarding solutions to being declined financing. The report can be found on our website. Thank you.